Oh, hi everyone, it's Susie here from Esoteric Trading Solutions. I hope you're all well. I hope you're all being kind to yourself, being kind to your family and friends, being kind to your putty cats, your dogs, any animal you've got, and just being kind to people in the world generally to make this place a better place. Um, just one of my clients wanted me to comment on an article that was written in Forbes by Francis Coppola, and basically was titled "There is no such thing as dormant funds in banking," and I've called this Ripple FUDDER, and she talks about Nostro and Vostro accounts. So just want to go through that article and just question some of the things that Francis has actually said, because I don't actually agree with them. So just want to go through that. So basically the article was from Forbes, and it was called "There is no such thing as a dormant funds in banking," and this is what Francesca wrote. Essentially, what I'm saying is she made out that the banking structure was incredibly simple. Banking structures have many different divisions and many transactions and many clients, and often it's very difficult to forecast money, settlement, forecasting cash flows. Transactions can be very complicated. Settlement is not instant, as with Ripple and XRP, and it's very difficult to forecast client behavior as well. It's very clear to me, with no disrespect, Francis, that Francis obviously doesn't have a dealing front office experience of managing real money and managing exchange settlement accounts with Vostro accounts and Nostro accounts, which affect exchange settlement balances with the Reserve Bank of Australia or the central banks. And also it's very clear to me that she's never done a foreign exchange transaction or any other type of financial markets type of transaction. So when I look at Francesca Coppola's background, she's a writer and she says she's got banking experience, but when I look at her LinkedIn profile, her experience is mainly middle office, and it's basically middle office systems and reporting and financial consolidation, which is more like accounting and middle office type experience, which again is very different to front office dealing room experience, managing money and exchange settlement funds, and managing financial market products, risk, pricing up client huge trades, settlement issues, dealing through the SWIFT system, Exigo, or whatever it might be, and dealing with real money issues, dealing with financial market collapses, financial markets risk, and those sort of things. So when we look at this article, she says there's no such thing as a dormant funds in banking. And I have to say this is completely incorrect, Francesca. And I have to say it's actually Crapola. She basically says that Ripple and XRP, because she's basically saying there's no need for excess surplus cash, and that the solution, that the problem Ripple is trying to fix is not a problem, therefore there's no solution that is required. And I tend to beg to differ to that. As far as I'm concerned, there's a $200 trillion problem in every financial market out there. No one can settle cash flows instantly except Ripple in every financial market. And it even goes down to the level, not just banking, but down to the level of you and me. Again, as I've said before, if I transfer money to my friend who I owe money to, it'll come out of my bank account. If I transfer it on Friday, they will not see it in their bank account until Tuesday or Wednesday. And if it's with a different bank, it could be another day. If it's foreign currency, it could take 2 days up to 20 days for cash flow settlement. Okay, cash flow settlement. Now, if cash flow does not settle, banks don't know when they need to fund that cash flow. Now, Francesca assumes that banks, might have 10 transactions a day. Banks can have millions of transactions a day, millions. Particularly if it's a large bank like Citigroup, Citibank, they've got different business divisions. Right across the bank, it'll be retail branches, a retail bank They'll have branches of 300 or 400 branches all over the country. They could have private bank, which is another silo, another business division. They could have the bond area, which is another business division. You know, they could have Treasury and specialized finance, which is another business division. They could have equities, which is another business division, and so on. And each of these business divisions will have their own clients. They will have their own transactions. They will have money coming in and money going out. But eventually, all that feeds up into Treasury, and Treasury have to fund those other business divisions and basically adjust their exchange settlement accounts. Now, banking is very complex. Banks manage risk, they manage financial markets risk, and they manage settlement risk. And it's because these settlement of cash flows don't settle instantly without Ripple that it makes it so difficult to manage the money that banks have, because all that money basically in and out wraps up into their exchange settlement account, which is sitting above, which basically has to be in positive by 9 o'clock in the morning with the Reserve Bank of Australia. Say if it's a banking Australian bank here like Westpac or ANZ. Now, if you're not in positive, the repercussions of that are severe. Myself as a dealer, I would lose basically my job, and the bank could lose its banking license if it happened more than 3 times. Okay, so banks are not simple creatures. You know, they have thousands and millions of transactions a day. And in terms of financial markets, these transactions, could even be more when financial markets are imploding. Then Frances goes on to talk about Nostro and Vostro accounts, and I feel she doesn't quite understand these either, because she talks about them being checking accounts, and I don't quite understand what she means by that. You know, like, is it a check account, or are they accounts that the bank checks? It doesn't make sense to me what she's talking about. A Nostro account, if I'm a Treasury dealer and I'm sitting in my bank, the Nostro account is my bank account for the bank, and it's my money, okay? If I have a Vostro account sitting with me, it's actually not my money, and it's another bank's money. Now, what she talks about is the Vostro and Nostro account being a check account, which doesn't make sense to me at all. And she says that the Nostro and Vostro account will mirror each other, which is not correct at all. A bank's Vostro account, another bank's Vostro account, which is their money, will have a completely different balance to what my Nostro account will have, because clearly what that bank has in their own Vostro account has nothing to do with me. The bank, I hold my own Nostro account, so I'm affected by my own clients and what's going on in my own bank balance sheet, whereas another bank with their own Vostro account will have their own clients and their own balance sheet and their own bank and their own client base and whatever. Also, a Nostro account and a Vostro account can be in different currencies, and often banks will run different foreign currencies in their Nostro accounts, my Nostro account, because I want to maintain liquidity, because I need to maintain liquidity, because I have a lot of foreign currency trades which are going to settle, and I don't know when they're going to settle. So I need a lot of liquidity in my accounts that aren't earning any interest, because I don't know, again, when my cash flows are going to settle. Okay, now, again, as we know with Swift, we never know sometimes when the cash flows are going to settle because of one problem or another. And that's why we need Ripple and XRP to settle, or Ripple to settle instantly, plus XRP for liquidity. Now, something Frances forgets to talk about is with foreign currency, even foreign currency can be illiquid depending on the currency pair. Again, if we're talking Aussie against Thai baht, if we're talking US dollars against Thai baht, it's not very liquid because it's not the liquid It's not a large liquid currency pair like the US yen. But even in times when markets implode, even the US yen becomes liquid to some degree, because price makers in times of market implosion and volatility will widen their spreads, their buy offer, their bid and their sell on a US dollar yen deal, because the markets are so volatile. So she's forgetting that in times of volatility, those spreads widen dramatically, even on liquid currency pairs. As for a liquid, forget about it. And it's not only that, with the liquid currency pairs, the forward curves change quite dramatically as well in times of implosion and times of market volatility. So there's so many things that she's missing in terms of price risk and managing price risks that banks have to manage on a daily basis. But it's not just that. If cash flows don't settle instantly, you've got these outstanding cash flows that me as a bank, as a trader sitting on the desk, a dealer, managing my exchange settlement account, and I need to make sure that I have a positive balance. I have to make sure that I have enough liquid funds just in case something cash settles and I'm not aware of it, because the risks of me not having enough money in my exchange settlement account is too high. I could lose my job, and that's feed income. She then goes on to talk about an American bank that needs to make payment in euro to a European bank. She just assumes that me as a bank, an American bank, I can open up a European euro account with this European bank. And again, that may not be true. I need to have, as a dealer, I need to be allowed to do that. I need credit limits with this bank. I need to have trading limits with this bank. I need to be able to have settlement limits with this bank. And if my investment committee or the asset and liability committee of the bank does not allow me, or my credit people said this is a crap European bank, it's like in Greece, and they say you cannot, have any limits with this Greek bank because we're worried that you get the money, you're going to lose your money, then I will not be able to have limits with them. Okay, so it's not always the case. I might have to make payment to another bank and not this Greek bank because I'm not allowed to deal directly with this Greek bank. You see what I'm saying? So me as an American bank, I'm not allowed to make payment to this Greek bank. I can only use another bank in between, a correspondent bank, to make payment to this Greek bank. Now, once you introduce another bank, the settlement of that currency is going to be even more delayed and more costs. Okay, more delays because cash flow is not going to instantly settle, and there's going to be more costs in terms of the foreign currency transaction. So there is just so much that Francis doesn't know and doesn't understand in terms of front office dealing and trading. Also, she talks about debt. And she talks about capital. Again, we don't talk about, when we talk about Vostro accounts and Nostro accounts, we don't generally call them debt within financial markets or capital markets. If you say debt to me, I'm thinking about issuing bonds into the market. I'm thinking about issuing long-term bonds into the capital markets, which is long-term debt. Okay. Another thing, she assumes that, we want to, as a dealer, we want to get interest on our deposits at all costs. That is not correct. In times of 2008, everyone was concerned about their money being intact, rather than getting an interest rate. So in times of 2008, when the markets implode, banks will pull their limits from small banks, which means they will not lend money out to small banks because they're concerned they're going to actually lose their capital. And even if a small bank turned around and offered you 20% interest rate, it is not enough if you're concerned about losing your capital. Okay, so, just some of the things you say, Francis, I'm sorry, but clearly you've never managed money at a front office level. That's very clear by what you're saying here. She goes on to saying, if the bank doesn't need the money, you know, they'll put it out, in an interest-bearing account. Again, as I said before, banks will not always do that. If they're concerned about their cash flow and when things are going to settle, they will have cash flow sitting in a non-interest-bearing account because the risk of not having enough cash flow is too high, over and above earning interest. Now, even this report, the McKinsey's report, and again, she shoots herself in the foot here, says that banks, have large Nostro and Vostro amounts, and they have to keep large amounts, to cover financial market volatility, and because they don't know when things are going to settle. Even the best forecasting system in the world, is not going to tell you when there's a market crisis. It's not going to tell you, say if there was bad publicity for the bank and all of a sudden you've got half your client base going to the bank and trying to withdraw funds. There's a run on the bank. Again, the bank has to fund its own position, and if everyone's taking out their money, the bank's left, with no money. You know what I'm saying? So even the best forecasting systems in the world cannot forecast that. Okay? And this is where she gets completely wrong. Vostro and Nostro accounts are not the same thing. Bank A will have a different Vostro account to Bank B, or a different Nostro account. Depends on their own client base and everything else. So she also says that Nostro accounts can be predicted in advance. It's not true. The reality is, as I said before, you have millions and millions of transactions going through in a day. And, again, she's assuming a very simplistic bank here. Very, very simplistic, that there's no other divisions. There's no divisions overseas. There's no divisions in 5 different countries. Again, we don't know about supply and demand sometimes. Funds could be tight. In other words, it's hard to get client deposits in because there's another bank, for example, offering higher interest rates. There's just so many things that go into banking, and it's not simple. It's not simple. But at the end of the day, SWIFT is a horse and buggy, as I've said before. It cannot settle cash flow instantly. It costs money when it can't settle cash flow instantly or foreign currency. It's been known to lose money. It can be hacked. All those things. The Bank of Bangladesh lost 100 million because someone could get into the SWIFT system and basically wrote a program to steal $100 million. Okay? They've had so many issues through SWIFT. It's a system from 1973. It's an old system. Okay, and it doesn't settle cash flow instantly like Ripple does, and that's the biggest issue in financial markets and banking. Now, she shot herself in the foot here because then she goes on to BAL, which is completely separate, and talks about banks needing enough liquidity to fund their payment obligations of the next 30 days. 1 minute she's saying banks don't need a lot of funding and that Ripple is not necessary. And then on the other side, she's saying, yes, they do need the funding. What's it going to be, Francis? Do they need it or they don't? Now, clearly banks do need the funding and they need surplus cash because of all these X factors. Anything could happen and they need to make sure that they've got enough cash in place. Liquid funds. Cash is king, and that's a fact. Also, when markets implode, like the equity market, you cannot get money for the love of money. Seriously. Everyone pulls in their limits, all the banks, and you cannot get money. Then she goes on to talk about a Nostro account. You can combine repo with FX deals and FX derivatives, seriously, to create a future funding stream. I mean, honestly, Francis, that's ridiculous. FX deals, FX derivatives, and, let's talk about this. FX derivatives are options, right? Options on FX. What? You're going to write options on foreign exchange to create a funding stream to fund a Nostro account. If anything, you're going to create more risk on the balance sheet, more price risk. The bank could lose all its money because you're writing options on foreign exchange derivatives. And then she's talking about repos. You just wouldn't be allowed to do that, Francis, and you're creating more price risk. And again, Ripple, even if you used XRP, it takes 3 seconds of price risk, because they can settle within 3 seconds. And Ripple has also said if there is 3 seconds of price risk for XRP, we will compensate you. But here you're talking about, funding a Nostro account, my Nostro account, because I don't have enough cash, and you're telling me to write options on FX derivatives. I mean, that's just ridiculous. That's introducing more price risk, exposing the bank to more FX price risk, and basically, that is a very dangerous thing to do, Francis, and it wouldn't be allowed. Honestly, just wouldn't be allowed. And then you're telling me to do repos as well as more spot FX deals, where the spot FX deal may not, settle within 2 or 3 days, but could settle, further and further out. Doesn't make sense, and it's not realistic at all, and not practical, Francis. I'm sorry to say that. Again, she goes on funding, again, all incorrect, what she's saying here. It wouldn't be allowed. It's not allowed. You can't write options of foreign exchange derivatives to fund, your Nostro account. It's just totally incorrect. Sorry to say that, Francis. It's crapola. Then she goes on to talk about, she acknowledges that McKinsey is talking about a $27 trillion balance in Nostro balances. And the point is, banks wouldn't have this money sitting there idly if they didn't need it. Okay, now that's a fact. Okay, again, she shot herself in the foot here. One minute she's saying banks, Ripple's not needed. Ripple's not trying to, they're not needed. There's no problem. And then she talks about McKinsey, and they actually say there's a $27 trillion problem for excess funding that banks have to hold. And I'm actually saying it's a $200 trillion problem. And then she's querying why Ripple have come up with a $5 trillion problem. And yet McKinsey, a report from McKinsey, which is an external consultant, have said $27 trillion problem. I mean, she shot herself in the foot, and it doesn't make sense what you're saying, Francis. Seriously. She's talking about funds being locked up. They're committed to making payments that are coming. Again, it just doesn't make sense. I'm sorry. It doesn't make sense what she's saying here. Not at all. Banks hold surplus cash because they never know when all the cash flows coming in and going out, what the overall is going to be in real time right now. What do I need now before 9 o'clock in the morning for when I have to have a positive balance with my exchange settlement account? So what you're saying doesn't make sense at all. She does admit that Nostro and Vostro accounts, they do have high balances. And then she says the role of XRP should be for eliminating these large balances. And let's walk through the process. That's what Ripple is actually saying. Ripple's saying, we can fix this surplus cash problem by instant settlement. Instant settlement. Banks have to hold large balances because they don't know when things are going to settle. And because they don't know when things are going to settle, it brings in more price risk. With Ripple, instant settlement means 3 seconds. And if they use XRP, they're only exposed to 3 seconds of price risk, which Ripple said, if they're exposed to 3 seconds of price risk, Ripple will absorb. If you're exposed to settlement where you don't know where it's going to be or the timing of those settlements, and you assume that it was going to be T plus 3, but now it's T plus 20, not only have you got price risk, you've got market volatility, you don't know when you've got to fund the cash flow, and you've got to manage a position. So I'm sorry, Francis, what you're saying doesn't make sense. You know, doesn't make sense to me. You know, then she goes into talking about, you know, foreign exchange and XRP. But again, doesn't make sense. You know, she's talking about, yes, we have a Nostro account and a Vostro account, but she's talking about the same thing. You know, again, I may not be, as an American bank, I may not be allowed to deal with this Greek bank, you know, because I don't have the limits for it, you know, simple. You know, so I can't make a foreign exchange payment to this bank when one of my clients have asked me to, because I don't have a limit with these guys. So I have to use another bank. If I have to use another bank, it's going to slow up the settlement problem, cash flow problem even more. And I have to go through a correspondent bank. And the settlement is not going to be T plus 2 days. It's going to be T plus 20. If I use XRP and Ripple, it would be 3 seconds. So again, doesn't make sense to me. It's crapola. What else can I say? You know, as I said, different currencies. You know, banks, you know, have a lot of businesses. They have a lot of clients. You know, 10 million clients. You know, money coming in, money going out all the time. They never know what their real-time real-time position is with money coming in and money going out across all the business units. And I have to manage that money in Treasury. Okay? Oh my God. She's saying that XRP would expose the bank to increased foreign exchange risk. Give me a break. Within 3 seconds? Come on. This is just ridiculous. Seriously. I'm getting frustrated with this. 3 seconds. So XRP and Ripple's technology, she's saying, would expose the bank to more FX risk. The settlement takes 3 seconds compared to the horse and buggy SWIFT, which would take anything from 2 days minimum to 20 or 30 or 40 days. Seriously, incorrect. Totally incorrect. Oh my God, what else can I say here? She doesn't understand that if XRP does a trade and they have to make a European payment, the trade using Ripple would be USD, selling USD, buying XRP, right? Selling USD, buying XRP, right? Buying Euro and selling XRP. The 2 XRP contra out, and you're effectively selling US dollars and buying Euro in 3 seconds. Okay? 3 seconds. Oh my goodness me. What else can I say here? Anyway, let's just go back to, I'll give you the bank example, and then we'll cover this bit here too. Assuming there's 5 million clients across this branch network. Okay, we all go into a branch, right? We know if we go into a branch, we see the branch manager. We can, borrow money to buy a house. Big property developers might know the branch manager. They want to borrow money to buy, property. We've got credit cards. They'll lend to small businesses. We can do foreign exchange, insurance, whatever. Now, on this side of the balance sheet, it's the bank's assets. If they write loans, it's basically how they make money. It's their asset. On the liability side, people will come to the bank and basically deposit funds. The bank, the retail branch will borrow money from small businesses. They'll borrow money from me and you because it's in our savings accounts. The ATM machine, again, they've got to fund an ATM machine, which could be down 10 million any time of the day. Okay. So say, for example, they've got their assets and they've got their liabilities. And say in one day, all those positions on the asset side equal 192 and on the liability side 85 million. Okay, where does the difference come from? And this is something that Francis is not even vaguely aware of. Okay, now the difference will come from Treasury. So basically this branch, who has its own assets and liabilities, is not totally funded because the liabilities are not funding the assets they've written. They will go to Treasury and say, we need 107 million for today, right? Because we've basically written more assets than we have the liabilities for. Okay, makes sense? So Treasury will get told there's 107 million that they have to fund for the retail branch network today. Okay, they might get those figures from last night and they know early in the morning they have to fund 107 million. Okay, another part of the bank, the international bank being Citigroup, whatever it might be, there's a private bank division. The private bank division can be high net worth clients, greater assets of 2 million liquid assets or more. Say they've got 2 million high net worth clients. And again, the private bank will have its own little balance sheet, which all gets consolidated into the central bank's balance sheet and everything else. And they'll have on their, their balance sheet, bank's assets and bank's liabilities. And again, this book is funded by itself, 500 and 500. But on the liability side, they've got 20 million, and on the FX side, on the asset side, they've got 10 million. So here they have a $10 million surplus. Okay, so Treasury will get told about the $10 million surplus. Okay, and that'll go up to Treasury. So again, we have so we've got 107 here, 107 here, which is a negative. Okay, and just keep this in mind, and hopefully you'll get the idea. There's a plus 10 here, plus 10, and then there's another division, another silo, corporate finance business, which the bank, Citigroup, has a huge corporate finance, mergers and acquisition business, where they'll deal with big corporate finances, corporates that are listed on the stock exchange, where they'll take out fees for mergers and acquisitions, all sorts of things. They might have on their asset side 20 million in fees. They might have assets they invest in, and they'll have liabilities of 100 mil. Now again, they've written 100 mil of assets. There's a deficit, okay? And the deficit is a negative of 20, okay? A negative of 20. Now where does that deficit come from? That deficit comes from Treasury. So you sort of get the idea. So if we go to another business unit of the bank, it could be lending and specialized finance division. Another business unit could be the equity business. When the stock market goes down or when it goes up, people borrow money from the bank for margin lending. It's my liability if I borrow from the bank, and it's the bank's asset, but the bank has to fund that, and Treasury needs to know about it. Again, there could be another business unit. It could be the commodities business, it could be the bond business, but you get the general idea. Okay, so the first business unit, they're short. This business unit, the retail branch, is short by 107 mil. These guys have an extra 10, and this one's short 120. Okay, so 107 plus 10, what's that? 97 plus 20 minus 20 is 117. I hope my maths is right. So effectively, Treasury has to fund for 117 million. I think that's right, 117. It was my maths bad. I've got bad maths. Is that right? 107 less 127 less 10. So 117, okay? So it's actually 117, right? So Treasury needs to get the money from somewhere. They know the business unit needs the money to give money out for loans, and they need to come up with the money, Treasury. Now, they either come up with it from their assets that are sitting on their balance sheet in Treasury, or they go to the capital markets and try and fund that from the capital markets. Keeping in mind, Treasury has its own clients as well, okay? Treasury has its own clients. Now, they get told this early in the morning that they need to fund the other part of the banking business of 117 million. Okay, so me as the dealer, I'll be told that I've got to fund 117 million. That should be 117. And what I will do, and I'll have my Nostro account, my Vostro account. My Nostro account is my account. Vostro account is someone else's account, another bank's account, so it's my liability. You know, within my exchange settlement account with the Reserve Bank, I'm only allowed liquid assets, which would be government bonds, liquid exchange settlement cash. Obviously, I can have cash with the Reserve Bank of Australia, where I'm only earning interest, less the interest rate, less 25 basis points, interest rate less 25. And it'll be any liquid assets that will sit with the Reserve Bank of Australia. Now, with the Reserve Bank of Australia, I can do reverse repo and over-the-counter repo, but we won't go into that. Let's just keep this simple. So by 9 o'clock in the morning, I have to have my exchange settlement balance in positive with the Reserve Bank of Australia by 9 o'clock in the morning, 9 a.m. Okay, and I know that I've got a deficit in my other business units. So what I do is I basically sell my government bonds, which are sitting in my exchange settlement account, to create that liquidity, that physical cash that then goes to my business units, which will go to the retail branch network, the 107 mil, and 20 to go to this guy, and I borrowed 10 from this person, this business division, right? Does that make sense? And even if I've sold 117 million in my exchange settlement account, I'm still sitting with a positive balance with the Reserve Bank of Australia. Now, exchange settlement accounts, I'm not allowed to not have a positive balance with the Reserve Bank of Australia by 9 o'clock, right? I've got to have a positive balance. Now, if I don't, me as the Treasury dealer operating the exchange settlement account with the Reserve Bank of Australia, I need to come up with exchange settlement funds pre-9 o'clock, which means I need to borrow money from other banks, not 11 a.m., which is a completely different product. I need to borrow exchange settlement funds that'll balance before 9 o'clock. Okay, completely different. So you can get the general idea. What happens in all the other business units will affect my exchange settlement balance at 9 o'clock that morning. So I need to make sure all those other business units have got funding, right? And I have my exchange settlement account in credit, in positive, by 9 o'clock in the morning, right? And that is paramount. What happens during the day is another book, which is, again, the 11 a.m. book, other book, another book, which is very different to exchange settlement funds. Okay, very different indeed. And that's something that Frances doesn't seem to understand, and rightly so, because she's never worked on a front office and doesn't understand the difference. But the thing is, settlement becomes paramount. Settlement and cash flow settlement, and knowing when something's going to settle and not having that price risk. Because as you can appreciate, if we're talking about 5 million clients here, 2 million here, 200,000 here and whatever, and I've got settlement risk on every one of these clients, I'm not even going to know what my balance is for managing my money with the Reserve Bank of Australia in my exchange settlement account. And that is the biggest issue. So in my Nostro account, which is my account, my own bank account for the bank, I need to keep surplus funds in that account, because I don't know whether something is going to come from somewhere. I've got a business unit manager ringing me in Treasury, and it's happened many, many times when I worked in Treasury. We need to borrow $200 million tomorrow. And in my exchange settlement account, I don't have $200 million. I can't lend them the $200 million because I don't have it. And this is the whole issue, with not knowing exactly when things are going to settle. And it's not just that. You're assuming that this is normal business operation when things are normal. Can you appreciate what's happening when markets implode? It is bedlam. You've got, you don't even know what's going to settle because banks go down the gurgler. You've got counterparty risk, credit risk, settlement risk. Also, you can't get money from the capital markets. You cannot borrow money from the capital markets for the love of money. Seriously, it is bedlam. And, you know, Francis is assuming that, you know, everything in normal banking works normally. And I can tell you right now, it doesn't. It doesn't. So banks need to fund with lots of surplus cash because they don't know what the client base is going to do. And the client base, you know, could increase, it could decrease, there could be a bad press story, there could be a run on the funds in the business, anything could happen. You know, not only the financial markets they've got to deal with, but there could be anything that happens with the client base. And they don't know what's going to happen in terms of their own liabilities, which are the deposits from the clients, for example. They get bad press, all the clients can withdraw their money. If they withdraw their money all at the same time, a bank has to replace that money from somewhere. And the only way to replace that is through the wholesale capital markets. Okay? And if there's trouble and there's financial market implosion, it is very difficult to get cash because everyone's trying to chase cash at the same time. And this is a real problem. So with no disrespect, Francis, you clearly have never worked on a dealing desk. Okay, so the thing she does say, and sorry, this is going to be, it's already long. She goes into saying that, you know, Nostro accounts and Vostro accounts are checking accounts. No, they're not. They're not checking accounts. You know, I don't know whether she means checking accounts like you check the accounts or whether it's a check, you draw a check. They are not checking accounts. They don't mirror each other. You know, a Vostro account is another bank's Vostro account. My Nostro account is my Nostro account. What the other bank has in their Vostro account is up to them. I don't control what the other bank has in their Vostro account. They are not the equivalent balance, right? My Nostro account is what I have sitting in my Nostro account because I want surplus cash regardless, because I don't know what's going to happen in terms of the settlement of my cash flows or what's going to happen with my client base. And any forecasting system, even the best of forecasting systems, is not going to give you the exact answer. There's going to be a variance on those forecasting systems. It's like trying to forecast where the Aussie dollar is going to go in a year's time, you know, or where the US is going to go, or what's going to happen with the equity market. You know, if you could forecast everything, you'd be, you know, a billionaire, right? You know, one bank's liability is different to the other bank's asset, and they are different balances. Another thing, Nostro accounts and Vostro accounts can be different currencies completely. You know, she talks about making a payment here. An American bank makes a payment in Europe and opens up a European an account with another bank. A Vostro account, she's got her language wrong as well. Okay, I, as an American bank, I may not be allowed to open up an account with a European bank. Number one, I need to be allowed to do that as a dealer. If I don't have a limit for that European bank, in other words, if my asset and liability committee do not allow me to invest the hard-earned money of the bank in the European bank, I'm not allowed to make any deposit to that European bank. Because if my asset and liability committee or my investment committee think this European bank is a bad credit, in other words, they're triple C or whatever, or they're a Greek bank, I will not be allowed to invest money with that Greek bank. So I will not be able to make a payment to them in euro at all. Okay? Again, you know, I may not be allowed to have a settlement limit with them. You know, and again, I won't be able to make that payment, right? So that's an issue in itself, and that's a real live issue. Again, you know, as I said before, Vostro account is the other bank's money, right? You know, but it's different to debt. You know, when we talk about capital markets, people say, you know, debt, when we talk about debt, we're thinking about capital markets and bond issues, you know, bond issues and that sort of thing. We're not talking about Vostro accounts. You know, her terminology is completely wrong here. And it's just confusing for people that don't understand what she's trying to get at. You know, and again, she says that, you know, people are going to deposit into their Vostro accounts or their Nostro accounts, or, you know, for money, or they're going to deposit on the capital markets for interest rates. You're not going to do that. You're not going to put your money out in the markets to get an interest rate if you're concerned that you're not going to get your money back. Okay, now that's what happened in 2008. People, banks like myself, kept money sitting in our own account, our own Nostro account, which is my account, because I didn't want to risk investing my money with a small little bank, even though I had a limit with them, because I felt that they could fall over at any time. So, you know, if I got an interest rate of 1% or 2% or 3%, but I ran the risk of losing $10 million because they fell over, what do you think I was going to do? There's no way I was going to lend out that money to that small bank. I wasn't going to take the risk. So again, practical situation. You're not going to lend out money to small banks when the financial markets are imploding. You're not going to try and get an interest rate, you know, whether it's 1%, 2% or whatever interest rate on your money, if you've got a risk of losing your money completely. You know what I'm saying? And again, you know, a Nostro account or Vostro account doesn't have to be on call. She talks about, you know, things being on call. But, you know, again, you know, things may not have to be on call. You know, yeah, let me just go to the right slide here. Sorry about this. Then she goes on to say, you know, payments can be predicted in advance, either individually or for large payments. And I'm saying that's just not true. It's very, very hard to predict all cash flows when we're talking about a very large bank with, you know, say 10 million clients. And the complexity of transactions, supply and demand markets, you know, for example, retail, you know, even, you know, talking about a real estate transaction could be delayed because solicitor can't find, you know, the title to the real estate property. All sorts of things can delay the reason why things don't settle. Then she goes on to talk about the bail rules, which, you know, again, are completely different to, you know, to the issue of XRP and Ripple providing liquidity and instant settlement. She basically shoots herself in the foot here. She's talking about, you know, banks need to have sufficient liquid funds to meet anticipated payment obligations over the next 30 days. But the thing is, they have to for 30-day payments, right? But the thing is, if they had instant settlement, this would not be a problem. Okay, it would not be a problem at all. But the fact of the matter is, banks do not have instant settlement and they have to manage those cash flows all settling at different times. So one minute she says banks don't need excess funding, then she says they do need excess funding. And the reality is it costs a bank a fortune to have money tied up in excess funding when they're not earning any interest rate or when they could be lending it out to the housing or property market at 4 to 5%. But the thing is, banks have to have excess funding because, as I said before, when markets implode, cash becomes king, absolute king. Now, with Ripple, as you know, they can do instant settlement within 3 seconds. Once something's settled and the cash flow is physically settled, there is no risk anymore. Number one, there's no price risk, there's no settlement risk, there's no credit limits being used up. The bank doesn't have to provide capital. The minute you talk about delayed settlement, the bank has price risk, they have settlement risk, they have credit risk, and they also have to provide capital. You see what I'm saying? And that's a huge cost to any bank. And that also includes Basel III, because within Basel III, if things are delayed in terms of price risk, a bank has to put up capital. Okay? And that's the important thing. She then says you can fund Nostro accounts with repo and spot FX deals. And again, you know, FX derivatives. I mean, again, you know, she's using this terminology and she's never been on a front office desk position. You know, again, this may not be available. Repos may not be available. You have, you know, over-the-counter repos and reserve bank repos. You know, people may not want to do repos in the capital markets. You may not be able to fund anything. You know, again, you've got to assume when the shit hits the fan, you know, you can't get any funding, you know, and you don't want to have to resort to using FX derivatives, which are going to cause you more risk within the balance sheet of the bank. You know, it's just ridiculous. You know, she's saying, you know, use these products which cause more risk in terms of the bank, when all you have to do is use Ripple and Ripple technology and XRP and settle something within 3 seconds, and then your risk has gone. I mean, it doesn't make sense what she's saying at all. It just doesn't make sense. Seriously. You know, she doesn't have any idea, honestly, she just doesn't have any idea. She knows a few terms and she's putting it together, but she's mixing up all the terms and everything else. With no disrespect, Francis, it's crapola. I'm sorry. So she's basically saying, and again, here she goes again. She's shooting herself in the foot again. Even McKinsey said that Nostro balances worldwide exceed 27 trillion. They're not coming down; they're actually going up, and that's the truth of it. The higher the volatility, the more financial markets collapse, the more banks will hold excess liquidity. That is a fact. And they won't put out their money to other banks because they don't want to take on the credit risk. They don't want to put out money to smaller banks for an interest rate even of 10% if they're going to run the risk of losing all their capital. Okay? She also argues that Nostro and Vostro balances lock up funds that could be put to better use. So the 27 trillion contains an element that does nothing. Ripple estimates 5 trillion. And then she says it doesn't say where it gets. I mean, that's irrelevant. I mean, you've had she's basically said, McKinsey said it's a $27 trillion problem, and Ripple said a $5 trillion problem. I mean, seriously, completely irrelevant. The problem is actually worse than that. I've done some videos before, and it's a $200 trillion problem. In the financial markets as it stands, there is no instant settlement of cash flow. Without instant settlement of cash flow, it means every financial market product out there has to be repriced, technically repriced, with price risk and everything else, okay? Complete misunderstanding here, complete misunderstanding. She also she talks about being locked up, can't be formed as a bank's liquidity reserve. Well, the Nostro account is mine. If I don't have the Nostro account sitting anywhere else, say it's a part of my suspense account and it's my money and I haven't put it out anywhere else as a bank, then the Nostro account is the bank's account, and it's not locked up because it's not placed anywhere else. It's not placed with another bank. Okay? That's the truth of it. So it's not actually dormant. It's sitting there, and acting as a liquidity buffer for me, so her statement is completely wrong. I just need to go through this a bit quicker because this is going on a bit longer than I thought. Ripple, again, has the capacity to instantly settle cash flow, and I don't know how many times I need to say this to this woman. The stuff she's talking about is because there's not instant settlement within the banking system, okay? And she's saying use FX derivatives and everything else. Completely incorrect products. As a matter of fact, taking on more price risk, more risk within the system, more settlement risk, more credit risk, and everything else. The American bank, again, she's assuming that it can make payment to this European bank, and she doesn't mention who it is. The American bank may not be able to make payment to this European bank. Like I said, they may not have a credit limit or a settlement limit with them. They may not be able to do FX with this bank. Okay? And again, with FX, as I've said before, if it's not liquid currency pairs, it's going to cost you more than using XRP, which is going to cost you buy-sell spread 0.00001. Whereas the currency spread, even for the most liquid currency spread, is 3 basis points. US yen at its best, and when markets are imploding, those currency spreads widen, get wider and wider. Okay, so again, this statement is very, very wrong indeed. A matter of fact, regulators would want instant settlement, and they want the price risk to be limited, not actually increased because of volatility. And when volatility gets really bad, we've seen it in foreign currency markets, foreign currency can go to zero, and the buy-sell spreads could go 300 basis points wide. In other words, you know, a currency could be 76, 79, which is 300 basis points. So just speeding this up. You know, as I said, Nostro and Vostro accounts can be in different currencies. You know, banks just don't deal with 10 payments a day. They deal with millions of payments. You know, they don't know what their customers are doing, and they don't know what, you know, they try and forecast things to the best of their ability. But again, you know, markets can turn, and they can turn very vicious, okay? And we saw this in 2008. Markets, there was a contagion effect. One bank went down, it affected another bank, it affected another bank. Now, we saw this with Suncorp Metway here. The Reserve Bank of Australia had to bail them out because there was a run on their deposits, okay? And no matter how much money a bank can store in its store, you know, if there's a run on the bank, you're in big trouble. So all this is incorrect, completely incorrect. You know, we're talking XRP and Ripple being 3 seconds. 3 seconds. Once a cash flow settles, there's no settlement risk, no price risk, no volatility. As I said before, foreign exchange can take anything up to 20 days using SWIFT. So what she's saying here is completely incorrect. Again, a large wholesale bank would not deal with a retail exchange. Ripple had their own treasury desk, and a large wholesale bank would deal with Ripple on the treasury desk and would deal in an over-the-counter market. And the trade would be pretty much US XRP, XRP Euro. The XRP would counteract within 3 seconds, and the Euro would be made payment. And it would be 3 seconds of credit risk, 3 seconds of settlement risk, 3 seconds of price risk. Even Ripple have said, if you have price risk within 3 seconds, we will compensate you. Seriously. No idea. Sorry, Francis, it's crapola. Golly. And then she talks about continuous link settlement system. Again, you have to be a member of that. You know, it's not available to all banks in Australia. You have to be a member. It's only in certain currencies. It's not practical for banking operations in Australia because it's in the late afternoon or at night. Okay. And also not all the cash flows can be put through real-time gross settlement, which is basically exchange settlement in the morning. Okay. So it just doesn't happen. And again, you have to be a member of it, and not all banks are a member of this continuous settlement payment system, which is available in the late afternoon in Australian time. So in other words, you cannot get instant settlement anyway. So this is just to confuse people even more. Quickly going through, this just drove me crazy. Seriously, I'm sorry, but she's talking about cross-border payments, which are foreign currency payments, okay? And again, it's the same issue. You know, settlement doesn't settle instantly. And also, some regional banks have to use correspondent banks. Okay, other banks overseas to do this FX settlements for them. You know, and again, if you have to use another bank overseas, you've got time delay and settlement delay using the old SWIFT system of settling foreign currency. If you use Ripple, it's 3 seconds. If you use the old SWIFT system and you have to use 2 or 3 more banks, it's going to slow up the settlement process, the cash flow process. You're introducing more pricing risk, more settlement risk. Plus, if I'm managing an exchange settlement account with the Reserve Bank of Australia in Treasury, I don't even know where that cash flow is going to settle. Okay, and I've got a fund for that cash flow. Anyway, guys, let's wrap this up. It's gone too long, my apologies. So please do look after yourself, be kind to yourself, be kind to your family and friends, be kind to your putty cats, be kind to everyone, and just make this world a generally better place. Thank you, guys. Cheers.